Yes, used car prices are extortionate. Everyone knows about it and most people despise it. But I have good news for all of you. Used car prices decreased in the first quarter of 2022. So is this the beginning of a market crash or just a slight hiccup in the upward price trend? That's what we'll find out in this video. We will first have a look at the used car market, then at the new market, and conclude with a price forecast for 2022. Let's start with the used market. Over here we have the Wholesale Vehicle Value Index that's put together by Mannheim. Like most of the other data that you will see in this video, it's taken from their Q1 Vehicle Value Index presentation. Now if it's your first time seeing the price development, you can see that the price trend is upwards, as prices tend to increase slightly less than inflation. There are however periods where prices increase more than the trend or less than the trend. Look for example at the 2008 financial crisis. However, last year is clearly the largest outlier since 1995. Prices dropped in the beginning of the pandemic as there was a lot of uncertainty, but they quickly recovered and surged to historic heights. Demand increased as people didn't like to use public transport and disposable income rose. At the same time, new supply decreased, following poor supply chain management and later the chip shortages. And all of this resulted in a price increase of 47% during 2021. Though, 2022 is off to a different start. A start that might mark the beginning of the end in the upward price trend. Compared to the end of 2022, prices came down by 5.4%, and this is the largest decrease that we've seen in the last few years. Moreover, the average depreciation rate is higher than what's typical for this time of the year, but more about that later. Now, an important reason for the drop might be the low demand from rental companies and franchise dealers during January and February. They already bought a lot at the end of 2021, causing a severe price increase. But viewers with a sharp eye might have noticed that this index covers the wholesale prices and not the retail prices, so the prices what consumers like you and me are paying. But also those prices are down. Over here we have the weekly wholesale and retail price index for 2021 and 2022. And typically it's so that retail prices follow wholesale prices with a lag of approximately 6 weeks. When wholesale prices increased last year, retail followed. However, at the end of last year we can see that the gap between the two prices was fairly large. Wholesale prices increased more than retail prices. We discussed in my Q4 market update that this might have been the result from dealer overconfidence or preparatory actions. Nevertheless, we can see that in the beginning of 2022, wholesale prices decreased and that retail prices followed. So it's not just the wholesale prices that are coming down, also retail prices decreased. Moreover, this goes for all the major market segments. Over here you can see from the brown lines that compact cars, entry-level SUVs, pickups, mid-size sedans and SUVs, and full-size SUVs all came down in the first weeks of the year, and that this decrease is larger than what is typical for the time of the year. And this goes especially for 2 to 4 year old cars. These saw the largest value decrease. You can by the way also see that some segments already recovered a bit, but more about that later. But what is causing this sudden price decrease? Well, let's make things simple, shall we? It must either come from a decrease in demand, an increase in supply, or both of them. Starting with the demand, we can see that it's indeed lower than what's typical for this time of the year. Over here we can see the demand level split by new and used cars and by year, relative to 2019. And that's quite a lot to take in, so let's break that down. The orange line over here shows the used retail sales relative to 2019. So this means that compared to 2019, sales are down by roughly 30%. The blue line shows the same but for new cars, and the dashed lines show it for 2021. Now if we focus on 2022, we can see that sales are below the normal 2019 levels and that it has been consistently below that. Moreover, it has been mostly below 2021 levels. We already saw a low level in the second half of 2021, but that trend continued now into 2022. So what about the supply level then? Well, it's low of course, but it's higher than that we saw in the beginning of 2021. Over here we have the supply availability for 2019, 2020, 2021 and 2022. And you can see from the red line that supply levels increased from below 2021 levels to above 2021 levels. Though compared to 2019, 2022 supply levels are still low. And this goes especially for commercial auction supply sources. Off-lease check-ins are for example at 13% of their normal level. Hence, I think that the overall market situation is not as heated as last year. We have a supply level that's slightly higher and a sales level that's slightly lower. And this is beautifully summarized in the graph on the right. Over here we have the days of supply, or the average days it takes to sell a car. And this shows that the number is relatively high compared to last year. Or in other words, cars are not selling as quickly. And all of this, in combination with the supply and demand analysis we did, fits with the price decrease that we saw earlier. The market is simply a bit less heated than before. But boy oh boy, things are different in the new market, so let's have a look at that. But before we do that, if you like this video, please support the channel by clicking on the like button down below. Thank you. But now then, let's talk about the new car market. Prices over there are still extremely high, as cars on average are selling 2 to 3% above MSRP. A look at the price development for new cars reveals that, historically, new car prices increase with inflation, but that it are the used cars that increased the most during the last years. New cars only saw a significant price increase in the second half of 2021 and seem to have stabilized now. However, even though that the recent price development resembles the one in the used market, the new car market is still hot. If we again look at the demand and supply side of things, just as we did for the used cars, then we can see that new car sales are extremely low. That's the same as in the used market. What's different is the supply level. We can see that during 2021 and the beginning of 2022, supply was considerably lower than that it was in 2020 and 2019. The line is sloping upwards, but this increase is insignificant given the historical price levels. So supply is tight, and this is of course a result of the shortages. And if you want to know more about the chip shortages, then I recommend that you click over here. Now this extremely low supply is also visible in the days supply for the new market. It's below 40 days and has been there since May 2021. And with that, I think it's time to summarize what we just saw and then talk about future prices. We saw that used car prices for the first time saw a significant price decrease, and that this decrease is visible in all market segments. The market is still very heated, but cooled down slightly. We saw that supply levels are still low, but that they are above 2021 levels, and that sales are relatively low. Also, new car prices flattened a bit, but that market is still very heated. Sales and supply are both low. The day supply is in fact still below 40, showing a high scarcity level. So we are now up to date on the latest market developments, but we of course all want to know what's going to happen in the future. Mannheim, for example, expects prices to increase in the near-term future. You see, if we look at the unadjusted price trend, we can see that prices always increase during spring. Car prices go up and down in a seasonal pattern, and this is mainly driven by the tax refunds that are handed out during spring. People get their money back, and this helps to increase demand in the used car market. However, tax refunds are delayed this year, and that also means that the seasonal increase in used car prices is delayed. Mannheim mentioned that you will start to see this tax refund effect on used car prices when a critical mass of around 50% is reached. And that should be about now. Hence, the expectancy is that used car prices will increase in line with their seasonal pattern, but a bit later than usual due to a delay in tax refund payments. But what about the price development in the long term? Well, over the full year they are expecting prices to come down by 3%. So this means that prices need to stabilize during summer and come down during the second half of the season following a slight increase in new car production. I already covered the full market forecast in a separate video and also compared it to a more pessimistic forecast predicting a 20 to 30% price drop. And you can click over here if you want to check out that video. Now, a key assumption in the 2022 forecast is of course that new supply will actually increase, and so far we haven't really seen that. Moreover, automotive manufacturers may artificially limit their production to keep prices high. We already saw statements from Daimler and BMW saying that they will use this strategy. And why shouldn't they? It's a seller's market with high profit margins. If we look at the industry insights report from Cox Automotive, we can see from the left-hand graph that transaction prices are on average 2% above MSRP. Moreover, even though that compared to 2019 2 million fewer vehicles are sold, transaction revenue is still above 2019 levels. So the increase in the transaction price resulted in a higher revenue, notwithstanding fewer units sold. And as I highlighted before, also profit margins are up, so automotive manufacturers have little incentive to bring supply levels back to historical levels. Consequently, I think it's likely that new car prices will stay at an elevated level, hereby of course also influencing used car prices. That's something that we discussed before, but now we can really start to see it materialize. So, to conclude, Is the price decrease of 5.5% during Q1 of this year the beginning of a crash? So far there are no indications that it is. The situation in the used car market stabilized, but an increase is expected following tax refund season, while the situation in the new car market is still heated. Moreover, there's little incentive for car manufacturers to bring supply levels back to their original levels. Therefore, when we consider the two forecasts that we have for 2022, the one from Mannheim predicting a 3% drop and the one from KPMG predicting a 20 to 30% drop, I think that the price development in Q1 shows that the one of Mannheim might be the most likely one. It doesn't mean that that's the one that will happen, just that I think that the probability of it materializing increased. Current developments do simply not support a 20 to 30% price correction during 2022. Now before we end the video, I need to mention that all of the numbers that you've seen in this video are mainly applicable to your everyday car. If you're interested in an update of the collectible or the sports car market, then I recommend that you click over here. And with that we do then arrive at the end of this video. Now if you enjoy this data-driven way of analyzing car markets, but would have liked to see an analysis for a specific car market, let me know down below in the comment section for which car you would like to see an analysis. Once there are enough requests for a certain car, I will make a video about it. Don't forget to subscribe and to click on the notification bell so you get notified when your requested analysis goes live. As always, thank you for watching and I hope to see you next week for a new video.